All right, I've welcome back for the episode of Carnivore Trades. Today is Monday, November 27th, 2023. If you've not done so already, please give it a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, hope everybody had a great holiday weekend. Spent some nice time off from the markets. I think I had probably the longest break I've had from the markets. I did obviously not do a video on Friday, so it's probably the longest break I've had from the markets in like literally years. So anyways, enjoying the time off here, but markets today really flat. I was classic. I would call this a holiday hangover session. I said that in the morning video in the shorts. And you know what that means is generally, so the market was basically closed for 4 days. We had a half day Friday, but no real fund managers are trading that, right? It's just kind of computers and maybe retail. So the market was open because of NYSE rules. But in any case, very slow session, right? I told the trading room this morning, like, look, don't force anything. This is just, it's going to be quiet most likely. And I said we'd probably be in a range between 45.50 and 45.60. Low of the day here, 45.46. High of the day, 45.60, spot 5.2. So very tight range. In fact, the last 3 days, with the exception of this little pop on Wednesday morning, it has been basically a 15-point range since Wednesday. So again, that 45.50 area has been a magnet. I think we'll return to more normalized trading tomorrow, and if not then certainly by Wednesday. But you can see right now, if we look at the spiders, you're going to see that. So Friday was a half day, right? So it was only open to, we're only open to 1 o'clock, and we did 29, just about 30 million shares. We're at 35 million right now at 3:30. So we're barely beating Friday's volume, and we've got an extra 3 hours. So, we'll probably finish at like 40, 41, 42 million or something like that. There's always some blocks that go off at the end of the day, but this tells you right now the market's quiet and it's asleep. You don't want to force anything in this environment either. I said that to the trading room as well. This is not a period to be aggressive. Let the market tell you what to do. Let the market, let the institutions be the heroes, and then we'll jump on once they give us a signal here. But right now, market's on the quieter side. We did have a bond auction at earlier this morning, 2s and I believe 6-month T-bills. It came out okay, so nothing really terrible going on there. The market kind of just floating around here. But tomorrow we do have Case-Shiller and consumer confidence. So a little bit of economic data. Then on Wednesday, we've got GDP second and deflator second estimate, advanced retail inventories, wholesale inventories, Fed beige book. And then Thursday, PCE, personal income, personal spending, claims, Chicago PMI, pending home sales. And then on Friday, we have Powell speaking, and we also have ISM. So I think, and again, last week, there wasn't really any economic data, and really the last 2 weeks. So we're starting to get that stuff to come back in here. So I think the market will have to wake up, and we'll start to see some volatility come back into this environment. But right now, definitely a holiday hangover day, and we're not going to make too much out of the price action here. For the SPX, in order to get a move here, you need to get away from 45.50. So for the bear case, that kind of starts with a breakdown of that. I think if for the bears here, if there's gonna be a bear move, it's gonna come on a gap down. I don't think they're gonna I don't think they're gonna pull this back intraday. They're gonna want to trap as many people as possible if and when this pullback happens. But you can see right here, we're still stuck at this all-time high trend line. So right straight up into that, and that's where we've stalled out. We are slightly above that gap window right now. There is another level at the gap fill. And again, that's about 25 points away, so 45.76 right there. So again, not a ton of upside there to that gap. It's not very far away. We could certainly get there. And then, of course, the double top. So those are the levels that we'd be watching. On the bull side, again, on the bear case, you gotta unpin it from 45.50 first. And then kind of get through some of these intraday levels. The big downside starts if we can break through 45.10, especially on a close. Then you can go down and test this green bar. And then if you get through that, the big level is 4,400. So if we take a fib here, again, obviously everybody can see the gap there. Not that far ahead. You take a fib there, that's right in that 382 range. So that's kind of the big area if we do start to pull back. But I think Again, I don't think they're going to do it during market hours. I think if anything, who knows, maybe it's on PCE or later this week, and you get that kind of gap down. They're going to want to trap as many longs as possible. They're not going to want to let shorts jump in. They're going to force you to chase it. If that is the case. But right now, markets are asleep here. And again, we'll see what we get tomorrow. We get more economic data trickling in as the week goes on. Triple Qs are up 10 basis points. Actually was up a lot more, but did fade pretty nicely. You can see here, we had a little gap down open, and then we kind of just floated up all day. Pulled back at 391 and faded all the way back to the red line. And now, again, just getting a slight bounce here as we get into the 330 time frame. Again, the Qs are going to generally follow the spiders here. So I'm going more off of the SPX chart just because the levels are a little bit better. Seeing as how there's really not a clear level outside of like 400 whole round number on the QQQ between here and the all-time high. Again, there's this little pivot right here at 405, weekly pivot right there, and then you have the all-time high, obviously. But right now in the short run, I think it's just easier to go off of the SPX and just make the safe assumption that the Qs are going to follow whatever that is doing. But Qs here up 10 basis points. Again, let's not make too much out of it. Russell 2000 is down 0.25%. Actually was down 1% at one point today. But this pattern here, I've talked about this last week. This pattern's actually okay. Nothing really wrong with it. In fact, I think if this, the 20 moving average there can catch up to price, I think, that could be a possible pop. Again, still got some resistance here at 182.50. But if you get through that, your next level is right up in, 185, 186. So I like the pattern here on the IWM. I just think it needs to do a little bit more basing and consolidating. And I would prefer, again, before doing a whole lot in this market, I want to see the institutions come in. I don't want to assume anything with this light volume here, because as we can see, again, just to use the spiders again, when the volume's this thin, this is all it takes to move the market, 10 points. So again, I want to see the volume kind of come back in here and reevaluate things. But right now, that pattern there on the IWM is perfectly fine, and I think it could go higher here if it does a little bit more basing. Dow here, again, down 43 cents on the DIA. No problems, though. Just a little overbought here, a little extended in the short run. Weekly, right into this previous level. We couldn't get through that before. We sold off, and now we're back into it again. Again, I think it needs to do some basing here, maybe some pulling back, possibly to this trend line here. But right now, Dow holding up okay, and we'll leave it at that. Semiconductors were down on the day earlier, but did come back. So now up 37 cents here. Again, obviously pulled back a little bit with that NVIDIA kind of sell the news event last week on earnings. If you follow the stocks here, that's up 14 basis points today. If this starts to roll over and you lose this 3,700 area, you're going back to gap fill around 3,600, 3,550. But right now, no real issues at the moment. Again, just a little overbought like a lot of other things. IGV hanging in there okay. We should get some volatility in this sector tomorrow. So Intuit, Workday, and CrowdStrike reporting earnings tomorrow. Also Pinduoduo notably as well. So we are going to get some cloud earnings. I believe they're all after the bell. Yes, they are. So a little bit of movement there potentially tomorrow in cloud. Again, as far as the chart is concerned, again, we're into this breakdown level from 2021, which we talked about as resistance 1, 2, 3, 4, 5, 6 weeks. And then a nice breakdown there. We're right back into that now. So this may need to, again, a lot of things kind of coming into big levels here. This may need to do some stalling out if it's going to get through that. But again, I love that pattern there on the IGV. Nice pop through it. And again, we're stuck into that area right now. And again, just doing some backing and filling. Dow Transport's down 1.15. But again, like the Russell, I don't have a problem with this pattern. I just think it needs to do more. What I like is that you've reclaimed the 220 and 50 moving average. But, if you take a look here again, kind of looking at the IGV, you just talked about 6 weeks of breakdown, or 6 weeks of consolidation before that breakdown. If we go to the transports here, you can see, in this area, 1, 2, 3, 4, 5, 6, about weeks, 5, 6 weeks that we had to spend in this area. So symmetry-wise, you might need to do a little bit more to get through that. So again, there's a lot of supply to chew through. But again, pattern-wise, if this holds up, there's no problems here. And, you bust through this area, the next real level is 15.6. So again, that's going to be that previous. Oh, we got to use a daily. I'm all over the place here. There we go. We got to use daily. Remember that previous inside bar? That's been a good point of control, hasn't it? Right? So we got above that. That failed. Back test. Failure. Had all that selling. Came all the way back up. big level, came all the way down, and then we tested it here. We got through it, bear flagged, and then broke down. So again, that's going to be kind of a magnet here. And looks like the transports want to test that again, but it needs to do more consolidation. That's my point here, but no problems on the DJT right now. Anyways, let's get over to rates. 2-year little gap and crap there on the yields. Again, we had an auction earlier today and bonds did catch a bid. Right now, 2-year yield bearish inside bar until proven otherwise. Target for this, is going to be 460. So 460, 465, get the 200 right there. That was your previous breakout. You back check to it. So that is going to be your level on the downside if we get down there. What would change my mind? You get a daily close above 505. If that happens, then the 2 years going back up to the highs. But right now, inside bar until proven otherwise. 5-year back check to the 20 today, essentially, and coming back in. So this looks weak to me. And I think this can go test 420. 10-year, a little bit trickier. Right, so this is also having kind of an engulfing look there on the daily, but you have a lot more support here. So again, previous high, double top, we consolidated and broke through it. Yeah, technically we're kind of consolidating above support, but I think this is pretty good here. I think we're going to need to do more to get through that. So I think the long end is, like right now, looks a little bit better than the short end, especially the 30-year. Yeah, could it have a little more downside to 440? Certainly could, but previous double top, there's a lot of support there for the 30. So I think the long end looks a little bit better right now. And then you also have that 100-day moving average that we never tested. It is minor now because we're consolidating above it, but again, it's still in that level. But bottom line, though, I think the long end looks okay, but it does look like yields are going to continue to do some backing and filling here, and that's what the charts suggest. Really, until proven otherwise. Another really good chart pattern here on the XHB. I like this a lot. The only thing that would keep me away from this is that it's up so much already, and B, I would prefer that again, that 20 MA to start to catch up the price. Additionally, you can see you're going into resistance at 84.25, and then you've got the double top there. So from here, what do you got? $2 of upside maybe. Versus, let's say this reverses and does some damage, you close below that green bar, you're going down here. So risk reward's not good. Pattern wise, this is like excellent. So interesting dynamic there, but XHB holding up okay. Again, if it does continue higher, 85.25, 85.50 is going to be your level there. If it starts to do some damage and breaks back down, again, that green bar low is going to be paramount. So 79.76 there on the XHB, but good pattern there, and we'll continue to watch that. How about VNQ? So VNQ acting well here, finally doing some repair work on this chart. So up 0.5% on the day. It is off the highs, but nice bullish inside bar. That's acting well. Again, upside here is probably only to 81, 82. And then near term, you got the 200-day. You've got a lot of supply right there overhead. But again, pattern-wise, it's okay. The problem is, right, same thing with XHB. If we do head lower, you take that green bar out, you've gotten really nothing till gap fill there. So risk reward wise, I don't like it, but pattern wise, I do like it. But VNQ looking a lot better there. XLF pulling in as well, did come off the lows here. Again, still into some weekly resistance here with this failed green bar. Little overbought, like a lot of things, but financials do look a little bit better here. If it starts to pull back, you want to see it hold that previous trend line, right? So we hit it, chopped through it, failed, back tested it and it failed, came down, and then we just gapped above it. So if we pull back into that, you want to see buyers step in right there. So that's going to be the level to watch on the XLF. On a pullback, I think the KRE actually looks pretty solid as well. Could be a laggard play in December. Not a terrible pattern there on the daily, and not a terrible pattern on the KBE either. So these have really firmed up here over the last couple of weeks, and we'll see how those pan out going into the month of December. XBD here pulling back today as well, but had a nice pop on Friday. Next level, we're just going to say 500 and then 510, and then it's the all-time high. That inverse head and shoulders is still valid. If you lose 480, it's invalid, and then we'll kind of go back to the drawing board there. But right now, no problems there on the broker dealers. Crude here all over the map today. We actually missed a day trade on this by a few inches here earlier, but it got up to 76.20. We were looking for it to fade down, and it did. It just had one of those pops before it could get filled. really quick, and then it came right back down. But in any case, crude right now, I think this still wants to go down to the upper 60s. They did move the OPEC meeting to Thursday, and again, there's another potential like market moving event that could take place later this week. So again, I do think the market wakes up at some point in the near term. But in any case, I think crude probably hangs out until then. Anything that happens before then is probably noise, but it's still trend is down. You've got lower highs here. You had a chance to rally up. I told you 78 would be resistance. So if we can get through that, you can go to 80, and we're unable to. So right now, crude's still under pressure here, and I think it wants that upper 60s, maybe $70 handle. And I'm just going to go with that until proven otherwise. I'm not willing to trade it. The pattern isn't good enough, but again, we'll reevaluate it if and when it gets there. You get back above 80, or especially a close above 81.05, then things definitely change, and I think crude can go higher. But until then, it's still under pressure. XLE, I'm not touching this at all. Look at this. Look at the chop. I want nothing to do with that. But I will say if you break 82, it's going to be down to right around 78. Right now, if you can get above these pivots, we'll just say 87.75 is your near-term level. I don't trust those levels right now at all, though. Same thing with XOP. I think it gets interesting at 128. OIH trying to hang on here, and that gets interesting at 290, 280. It still has a very good, potential wedge pattern here on the weekly. It's kind of immature, and again, you guys know I like the monthly as well. And if this can base here, this can go to 450, 500. But it's not going to happen right away. It's a monthly pattern, so just be aware of that. Uranium here continuing to be a powerhouse. So again, another FOMO sector into the end of the year. I think they're piling into this one. I'm just going to give CCJ the upside bias to 50. Until it gives me a sell signal, it hasn't really had pullback. I mean, if you look at the daily, you're like, oh yeah, it had a pullback, right? But looking on the monthly, it's just parabolic. So until it gives a sell signal, I'm just going to say $50. That's where it can go. It's very hard when you have something that's parabolic like this to kind of predict a high until you get a high volume reversal. If that happens, then I think it's topped out. But this probably wants to hold up into the end of the year. Again, like I said, a lot of funds are just piling into this right now. That's what I don't like about it. So just be aware that if there is a run for the exit, it can happen very quickly. But right now, nothing wrong with it. Again, if you own it, trail your stop. URNM, that can still go to double top. By the way, I believe spot uranium made a new 11-year high last week. It's now at 80.25 a pound, I think. But in any case, URNM can still go to double top. And that still looks just fine. Nat gas pulling back in, so down 2.25 here. That has a contract rollover today. If we look at this adjusted chart here, you can see it's just hanging on to this trend line. Also hit a 618. We'll see what that looks like by the end of the week. But pretty good sell there on nat gas, though it is off of the lows here. Let's look back here. So dollar index. There we are. So dollar kind of coming into this local double bottom here was up decently at one point today. Had a decent pattern intraday to go higher, but looks like it wants to go, never quite got to that 103 area, but you have consolidated now. So I'm going to just say 102.50 right now on the DXY. And again, that's going to be the 618 here. And it also coincides with this previous little chop zone. So that should be a little demand zone. I think that's where the dollar wants to go here in the near term, unless it, reverses tomorrow and gets saved there. But right now, DXY under pressure. And obviously that's a tailwind for markets. But right now, again, markets are asleep, and again, we'll see if we get tomorrow here. But dollar starting to roll over, and we'll see. Keep an eye on 102.50 there. Gold actually having a pretty good day again. I don't really see any issues here, up 0.5%. You get through this area, it's up to 2050. That's really, it's really that simple right now. If we pull back again, look at 1950. There's your trend line. You break through that, then I think it could be vulnerable down to 1900. But right now, there's nothing really wrong with the gold chart here. Weekly looks fine. And the monthly looks fine as well. We talked about that monthly green bar low. That's held up. And it looks okay right now. Silver also having a big day as well, up 1.4. It is off the highs. 25 will be resistance. You can also take a look here. If we go to, we got to go back here. There we go. There's also kind of a trend line right in this area. We could use the all-time, or not the all-time, but you guys know. But right in that area, there's even another one kind of like right here. Yeah, I like the other one better. But either way, little trend line there from the highs. It is into that now. I'm pulling back again, 25 whole round number. See what kind of pattern this gives us. But silver looks fine here. I don't see any issues. I think platinum is bottomed as well. A pullback on here I think can be bought, and I think it's more of a long-term low. Possibly palladium as well. Needs to firm up just a little bit though. I don't want it to roll over on that 20-day. But again, I'm watching the monthly close on this one. Look at that level right there. And that 200-month moving average with a tail candle on heavy volume. And we can also take a fib here as well to this big low back in 08. And you're going to see a 75% retrace there. So nice level on palladium. Possibly a long-term level there. Copper is actually firmed up nicely as well. So that's down 86 basis points today, but you have a bullish inside bar. On Friday, we did close above the red on the weekly. So that has firmed up. I'm going to just give it the upside bias to 390, maybe 395, $4 if it really starts to get going. You have a decent pattern there. If it fails and we start to break back below, well, then we'll go back to the drawing board. I still think the bigger macro move needs to go down and test these lows again, 330, 340. But right now, I'm not seeing any reason why it can't consolidate for another move up. And the charts tell me that, then I'm just going to go with that until proven otherwise, really. Bitcoin's still hanging in there, just shy of 37,000. We can even extend this trend. Look how steep this trend line is, and it's been going on for a while here. Until you really damage that, I don't really see any problems here. Again, the only issue is, and I still see it, that monthly BB is kind of just holding price down here. So we'll have to see what that looks like at the end of the month, which is only in a few days here. If that opens up, then I think Bitcoin could go higher. But we'll see. Again, price is acting well. It's not rejecting, and it's hanging in there okay. Alts are holding up okay. I see ETH coming back in, but pattern-wise, no problems there. Doge, DOT, Litecoin, a lot of these are, a lot of these were overbought. They're coming back in. Look at Solana still holding up really well. So crypto here looks fine. Just be aware that, if we get news on the ETF, you're going to see volatility, and you're going to see a lot of investors come, especially if it gets approved. You're going to see a panic bid. I think that could become a sell the news. If it gets unapproved, that could be, obviously a major downside catalyst. So just be aware of that. You're trading around basically a volatility event that we don't know when the actual event is going to be released. But right now, I don't see any issues with the charts on Bitcoin and crypto. Anyways, spiders here, basically flat here. So we floated up, now pulling back in. Again, still inside of that range. SPX 4550 to 4560. And so no real issues. But we'll see what we get here. We're into that trend line. I would think some volatility and some volume will come back into this market. Remember, lots of economic data coming up this week, and OPEC as well, so don't forget about that. And then, of course, Powell speaking on Friday. So markets should have some volatility coming back in. Again, don't force anything until we see that. Don't try to front run the market while there's no institutional participation. So anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.